Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, November the 20th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, economic data. Not really anything across the pond or here in the United States, it being a light week anyway for volume and everything else. One would expect the equities to start pushing higher on these light volume days, but we're not really seeing that. And we're not getting any movement off economic data because we haven't gotten any today. So this is all pretty much follow through from just the bearish trend we've seen. As we can see here in crude oil, there is no sign of a stop to this slide. I was expecting it to want to stay in the 50s after the last crude oil inventory report where we got that build of 10 million barrels over, or it was about 7 million barrels over what was expected. But the reading came in at 10 million barrels. That has been a catalyst for an extra down move to that 40s that we've been talking about. Now, tomorrow we do get economic data on crude oil inventories again. That's going to be the real key, as far as I'm concerned, to see whether or not that was just a blip. If it's just because we are producing so much oil and there's so much supply out there, it's not really decreasing demand necessarily, but because we're seeing this huge supply because the United States is producing so much oil through fracking, that could be part of all of this, just the buildup of supply. Now we get down into these 50s, those guys in fracking are going to have much more of a difficult time making money, and we could start seeing those guys slow down on that fracking process. So that would limit the supply then, right? And hopefully then for bulls would drive demand there. I would rather see oil down here in the 50s for the rest of my life because that allows us to spend money elsewhere and driving that velocity of money. But right now we're seeing crude oil come off by a couple of dollars right now, making new 52-week lows, trading at that 53.63 earlier this morning. Right now we're about a 50 cents, 70 cents higher than that. On to gold futures, they're off just a little bit, which is a bit surprising with the fact that we're still that move in the equities this morning, but now the equities are starting to find some buoyancy. We'll talk about those in a minute here. Let's talk about Bitcoin. The only reason why I'm talking about Bitcoin is because of this last real slide we've seen pushing down to this 4185 level. I'm seeing a lot of people, especially on Twitter, talk about their friends getting liquidated on their Bitcoin holdings and things of that nature, people having to dump. That is a first sign of capitulation, you guys, when we start seeing these liquidity type events. And that's what happened earlier this morning. Now we're starting to see a bit of a bounce back higher. Is that the bottom? Well, I'm going to wait to see a bit more of a confirmation here to come up with that kind of a scenario. But the fact of the matter is, those are the first signs you start seeing about in and around a capitulation event, which is usually a good sign to start getting in. I saw that also with the equities earlier this morning as well on Twitter. A lot of people just talking about getting out of all of their longs and starting to flip to the short side. Again, big signs as to what the overall, Twitter is a small segment of the overall. So if we're starting to see a lot of these people on Twitter talking about it, that's kind of the mentality across the board, right? You and I are probably going through the same thing. I'm always early on these things, and I have been at that situation where I'm thinking, I start second guessing myself. That is a sign of capitulation. If you're doing the same, the broader markets are thinking the same thing as well. So always take what you're thinking and hold that in high regard, because a lot of times that's what other people are thinking as well. All right. Well, with bonds moving higher, that's mostly a sign of, even Kramer was talking about this yesterday. I don't watch a lot of Kramer, but on CNBC, I happened to walk through and him talking about the Fed not understanding what they're getting involved in here. Their mandate is basically off of employment, but they're not really looking at inflation as much, and they're not looking about what this interest rate increase is doing, what that ripple effect does through the housing and everything else, right? If I have to pay more for my mortgage because I've got an adjustable rate mortgage, then I can't afford to go out and buy those other little things that I normally would have. Maybe my Starbucks or, just going in whatever you like to buy on those individual days. That is not necessarily going to happen, and that slows down the velocity of money because everybody spends their monies differently. But we've got the bonds pushing higher. A lot of people talking the Fed should pause, but it looks like they might still, it's starting to come back in where they might still increase interest rates at the December meeting. All right, VIX moving higher, mostly because of the equities, the way that they're acting today. As you can see here with the Dow Jones Industrial Average, it's down about 400 points, just a little over. A couple of minutes ago, we were rallying up and starting to get a bit of a green candle, which I think is a good thing. This gap down below this point of control and where it lines up with the Fibonacci extension, that pop below that is a bit of a move that we need to really look at strongly, especially if the candle, if in towards the low end of today's range, that's not going to look so good. Higher end of the range, let's say the upper quarter, that's going to look very much like a bottom as far as I'm concerned, like a bit of a capitulation event, and people start realizing it and start coming in to cause that support. We're not seeing that as of right now. We're going to have to wait to the end of the day, obviously. A NASDAQ, similar situation, rally up to the upper quarter of the day. That is going to look very strong in my eyes. And we're starting to see some of that strength come back into the overall markets, at least as of recently, last hour, I would say. But with that being said, the NASDAQ down almost 100 points on the day. E-mini S&Ps haven't made that comeback like we're seeing necessarily in the Dow and in the NASDAQ. But again, a nice rally above this Fibonacci, finishing up in this upper quarter. I think that this chart will look very good. We're getting a lot of this gyration in and around this point of control. And I think we might start seeing this settle down a little bit, as I've talked about basically for about a week now. And as you can see, overnight inventory made no attempt to try and cover the shorts that we saw happening in the day session yesterday. So that is a pretty bearish sign, but you can see coming into today really flushed out to the downside. But as the open market, the free market price discovery happened in the day session, that has seen that push higher, as I think people were really starting to capitulate coming into today, almost like a foregone conclusion. They saw where the futures were and were like, that's it, I'm out, and started dumping. Now we're starting to see that bounce back. That's a very strong signal of capitulation, or at least we're very close to a capitulation point. And having said that, like I said, I'm usually early in on these, but the fact of the matter is nobody picks the high, nobody picks the low, right? We're all a little bit early or a little bit late. I'm usually a little bit early rather than late. So having said that, I'm not too overly uncomfortable with my position. It was a little bit uncomfortable earlier this morning, but I hope to see a late afternoon rally. If it's not looking good, I might be one of those people that look to capitulate right here and now, because if we finish down in that lower quarter of those bars that we saw today, that is not going to be a very good sign for a bullish thesis. All right. So having said that, anyway, let's talk about a couple of trades that I've looked at. I tweeted this out yesterday with XRT on this trade that I had put on. I got out of it. I had on the December 5th, bought the 52 puts and sold the 45 puts. I originally paid $3 and about $3.30. Let's say, I don't have that number right off the top of my head, but it was right around $3.30. $2 increase was my target for max profit potential on that. And so I had a working order in there to get out at $5.20, or sell it out at $5.20 for that profit. That worked out quite nicely. As you can see, I talked about this yesterday. If it came down and even just touched that 45 handle, then I would probably be able to get filled. It came down, and basically when it was trading 45.18 was when I got filled on my 50% max profit. So when I'm talking about these things and these rules in and around my strategies, that comes to fruition. All you need to do is get kissed on that. You've beaten the probabilities and get out. Now I could look at this today and say, well, oh my gosh, look, I could have done much better today had I just waited. No, I don't do it. I don't play that game, because today it could have been just the opposite, where we were much higher and came down, touched this Fibonacci, and that acted as the support. Went down and tested the value area low. That is a sign of, pushing out too far and wanting to come back. So I don't even look at that. Yeah, I could have probably made a little bit more money on it, but I'm following my rules, staying mechanical, so that I know I'm beating the probabilities. I am all well and good with any time I can crush the probabilities like I did on this strategy. All right, so I'm out of that XRT trade, and I haven't added anything else. I am looking at Under Armour. I have a resting order to get out at $18.50, which is right where I am short. Came down very close and thought about pulling the ripcord on it. It bounced up and away. So I've still got that resting order in there. I'm not looking to chase that anytime soon. I'm going to kind of play this out. I think we're going to see a little bit more of that in Under Armour going forward. So I'm still going to have an opportunity to get out, especially if it tries to come down and cover this gap in here. So sticking with Under Armour, but I just wanted you guys to know that I do have a resting order in there, and that's the only thing I'm working. The rest of them I'm just kind of let meld right now and see how the rest of the day kind of transpires before I really start making any major decisions as to what I want to do with my portfolio. All right, so that's about it for today. Thursday's webinar is going to be a really good one. Check that one out. I'm doing medium volatility strategies, so it's great for, is volatility going to continue to increase, or is it going to come out? If you follow my thesis, volatility should be coming out. But if your thesis is that we're going to continue to go down, we could still see volatility come in. And that is the conundrum, right? Is volatility going to go up or go down? Well, I've got a couple of strategies that I'm talking about in the next week or so about how you can neutralize that volatility coefficient, theta, and things of that nature, so we don't have to worry about that in this type of environment. So check it out. Go to protraderstrategies.com, sign up for the webinar, and that's about it. Other than, if you can't take that, take it easy.